Welcome to the video solution for the Bowen Ltd refundable taxes question. Ensure that you have a copy of the question and that you've done the question on your own before you start this video solution. Moving on to the next slide, let's talk about the requirements in the Bowen Ltd case. Once again, this is focusing on refundable taxes. Part A is asking for the transitional balances for the eligible and non-eligible RDTOH account. Now remember, in the earlier video lecture we said that starting on January 1st, 2019, rather than a company having one RDTOH account, it now will have two, one eligible and one non-eligible. Part B of the requirement asks us to calculate the refundable Part 1 taxes for 2019, Part C, the Part 4 tax for 2019, and then moving on to Part D, we're asked to calculate the RDTOH account balances for both eligible and non-eligible at the end of 2019. And then the final requirement is to calculate the 2019 dividend refund. So let's move on to the next slide and let's look at Part A. Now, transitional RDTOH balances. This is going from the end of 2018 to the beginning of 2019. So prior to 2019, a company only had one RDTOH account. So RDTOH, refundable dividend tax on hand, all the refundable taxes that the corporation paid would just go into this one account. Now, starting in 2019, there are two. So let's look at this balance for Bowen Ltd. At the end of 2018, Bowen Ltd had $55,000 in their RDTOH account. Now, the way that we calculate the RDTOH account is that we start off with the ending balance and then we subtract any dividend refund for that year. So in 2018, Bowen Ltd claimed a dividend refund of $13,500. So going into the beginning of 2019, their RDTOH account balance is $41,500. The ordering is always very important. You always have to calculate the year-end balance first before you can determine whether you get a dividend refund for that year. Remember, the dividend refund is the lesser of two amounts, and one of those amounts is the balance at the end of the year. So this is the way the ordering works. Now, going into 2019, we now have to allocate that $41,500 between the eligible and non-eligible RDTOH accounts. So step one is to start off with the eligible amount. The amount that can be allocated to the eligible RDTOH is to the extent of the company's GRIP balance. Now, GRIP stands for General Rate Income Pool. Now, there's a calculation of how to determine the GRIP balance. However, in this question, we're told that the GRIP balance is zero. Because the GRIP balance is zero, Bowen Ltd cannot allocate any amount of the base to the eligible RDTOH account. So that's fairly straightforward in this example. Then we move on to the second step. The remainder of the base will go to the non-eligible RDTOH account balance. So $41,500 is the base, zero allocated to the eligible account. The remainder, $41,500, goes to the non-eligible account. Now, when dividends are paid out, they have to be designated as eligible or non-eligible, and so therefore having these two balances for the RDTOH account balances will determine whether they get a dividend refund or not when the company pays out an eligible or non-eligible dividend in the future. So that's how that base amount will be allocated to these two RDTOH account balances. Moving on to the next slide, the next requirement is to calculate the refundable Part 1 tax. Now remember from the earlier lecture, refundable Part 1 tax only applies to CCPCs, which Bowen Ltd is. Now the refundable Part 1 tax only applies to aggregate investment income. If a CCPC does not have any aggregate investment income, AII, it does not have to pay any refundable Part 1 tax. Now recall that the refundable Part 1 tax only applies to AII, so step one, calculate the amount of aggregate investment income. For Bowen Ltd, they had a capital gain. We have to multiply that by 50% to get the taxable capital gain, and then we add their net rental income. Now remember, dividends that are deductible when calculating taxable income are not included in AII. So those dividend amounts that Bowen Ltd received during the year, those are not part of the AII calculation. So Bowen has AII of $63,000. Then we can move on to the calculation of the actual refundable tax that Bowen Ltd has to pay. It's the least of three amounts. The first amount is 30 2/3% times the AII of $63,000. Now there is an adjustment, as you can see here on the slide, for foreign non-business tax credits, but Bowen Ltd does not have any, so that amount is 0. Item 1 then would be $19,320. The second amount is 30 2/3% times the taxable income minus the small business deduction minus any adjustments for foreign tax credits. Now, we're told in the question that the taxable income is $495,000. Also, we're told that Bowen Ltd shares the small business deduction limit of $500,000 with 3 other associated corporations, and Bowen Ltd's share is 1/4 of that. So the $500,000 times 1/4 is the $125,000. And so when we work through the calculation, item number 2 is $113,467. Then we move on to the third item. The third item is the amount of Part 1 tax payable. Now once again, the calculation is given to us in the question, so we don't have to worry about calculating that amount. We can just take that amount and add it to this calculation here. Looking at the 3 amounts, the least amount is $19,320. So that's the amount of refundable tax Part 1 that Bowen Ltd has to pay this year. Now they're going to get that back when they pay a dividend. Now because we have 2 RDTOH accounts now, refundable Part 1 tax gets added to the non-eligible RDTOH account. So when we get to that part of the question later on, we'll remember to add this $19,320 to the non-eligible RDTOH account. Okay, let's move on to the next part of the question. Part 4 refundable tax. Now Part 4 refundable tax, if you remember from the earlier lecture, only applies to dividends received by a private corporation. So whereas the additional refundable tax, the ART, applies to aggregate investment income for a CCPC, the Part 4 refundable tax applies to all private corporations on the receipt of dividends. Now, with the Part 4 tax, there are 2 instances that we have to do this calculation. The first instance is if the corporations are not connected. Now, in this question, Bowen Ltd received 2 sources of dividends. One source was from Canadian public companies, and the other one was from a company where they owned 51%. So the Canadian public companies would not be connected with Bowen Ltd. Now remember, one way that companies can be connected is if the shareholder corporation has control of the subsidiary corporation. And so we're assuming that because these are big Canadian public corporations, that Bowen Ltd would not have any control over them, so they would not be connected. Now in this example then, the Part 4 tax would be 38 1/3% times the dividends received. Now these are considered portfolio dividends. Bowen Ltd invests in a bunch of shares in Canadian public corporations, and that's part of their portfolio of investments. So these dividends are referred to as portfolio dividends. So we go through the calculation, and that's going to result in Part 4 tax of $11,500. And then we have to look at the next situation, the dividends received from Salt Spring. Now, because Bowen Ltd owns 51% of Salt Spring, those 2 corporations are connected. And the calculation for Part 4 tax, when the corporations are connected, is different. Part 4 tax only applies when the payer corporation, in this example Salt Spring, receives a dividend refund. Now we're told that Salt Spring did receive a dividend refund of $23,220. Now Bowen would only have to pay Part 4 tax equal to 51% of that, because that represents their ownership interest in Salt Spring. So the Part 4 tax calculation then for this second dividend amount would be 51% times the dividend refund that Salt Spring received of $23,220, resulting in Part 4 tax of $11,842. So if we add those two amounts together, the total Part 4 tax that Bowen Ltd has to pay this year is $23,342. Now, Bowen Ltd will get this amount back later on if they pay a dividend to their shareholders. Now, because there's two components here, we have to now determine which RDTOH account we're going to add this to. Now, the Part 4 tax related to the portfolio dividends, those are eligible dividends, and so we're going to add those to the eligible RDTOH account. And the Part 4 tax paid on the non-eligible dividends received from a connected corporation, those would be added to the non-eligible RDTOH account. Once again, we'll get to that part of the question in a little bit. So let's then move on to the RDTOH account balances now. So at the beginning of the year, we calculated the eligible RDTOH account balance as 0. Remember, the company had 0 GRIP balance. So during that transition from 2018 to 2019, the beginning balance of the eligible RDTOH was 0. Now we would add to that the refundable taxes that they paid this year that would be allowed to be added to the eligible RDTOH account. And if you remember, it was only the one amount on the eligible portfolio dividends that they received from the Canadian public companies, which was $11,500, what we just calculated on the previous slide. So the ending eligible RDTOH account balance is $11,500. Now let's move on to the non-eligible. At the beginning of the year, the non-eligible RDTOH account balance had $41,500. We determined that during that transitional calculation that we did at the beginning of this question. Then we add all the refundable taxes that Bowen Ltd is going to pay this year that get added to the non-eligible account. One of those amounts is the refundable Part 1 tax, $19,320, and also the Part 4 tax related to the non-eligible dividends received from the connected corporation, Salt Spring. We add up those amounts, and so our ending balance in the non-eligible RDTOH account is $72,662. Now remember that the dividend refund, which we'll calculate next, is subtracted from these balances after. So we have to calculate the year-end balance first, because the dividend refund requires us to know how much we have in the RDTOH account balances. So let's move on to the next slide and let's look at the dividend refund. Now with the dividend refund, we only get a dividend refund, which is basically a refund of the refundable taxes that we already paid, only if a dividend is paid to our shareholders. Now when Bowen pays a dividend, they can designate it as eligible or non-eligible, and that's going to impact the amount of the dividend refund they get. Now, in the question, it says that Bowen's policy is to designate the dividend as eligible to the extent that they're going to get a dividend refund. And they'll only get a dividend refund if they have a balance in their eligible RDTOH account balance, which we determined that they do have a small balance. Now, eligible dividends can only be designated to the extent of the company's GRIP balance. And so once again, here on the slide is just a quick reminder of how we calculate the dividend refund, which is the dividends paid times 38 1/3%. Now, getting back to the eligible dividends can only be designated as eligible to the extent of a company's GRIP balance, general rate income pool. Now, we were told in the question that the balance in their GRIP at the end of last year was 0. This year, we know that they received $30,000 of eligible dividends. Remember, from those Canadian public corporations? So we know that that amount would get added to the GRIP balance. So at the end of 2019, Bowen should have a GRIP balance of $30,000. Now, we also know that they only want to designate dividends as eligible to the extent that they will get a dividend refund. Now, the dividend refund, the maximum they can get is that balance in the eligible RDTOH account. Now, if we use the formula dividend refund equals dividends paid times 38 1/3%, we can determine what is the dividend they would have to pay to get the full amount back that is currently sitting in their eligible RDTOH account. So let's rearrange that formula. Currently, in their eligible RDTOH account balance is a balance of $11,500. If we rearrange the calculation and divide that by 38 1/3%, we realize that they have to pay a dividend of at least $30,000 and designate that as eligible in order to get the maximum dividend refund back. Now, that $30,000 dividend just happens to equal the balance in their GRIP. So Bowen then will designate $30,000 of the dividend that they're going to pay as eligible. Therefore, they're going to get the full dividend refund of $11,500. Now, let's actually move on then to figure out, well, how much will be designated as non-eligible. If the total dividends paid is $75,000 and $30,000 is designated as eligible, the remainder, $45,000, is going to be non-eligible. Now, by paying a non-eligible dividend, they will also be entitled to a dividend refund, but once again, to the extent of the balance in their non-eligible RDTOH account. So let's calculate what the dividend refund is going to be. The dividend refund on the non-eligible dividends is going to be $45,000 times 38 1/3%, which is $17,250. Now, that is less than the balance that they have in the non-eligible RDTOH account of $72,662. So the maximum dividend refund they can get is going to be $17,250. Now, let's move on to the next slide, and let's sort of just summarize the total dividend refund. The total dividend refund is going to consist of two amounts: the dividend refund on the eligible dividends paid and the dividend refund on the non-eligible dividends paid. And so that's going to result in a total dividend refund of $28,750. Now, let's just wrap up this question by updating the RDTOH account balances. Remember, we said that with the RDTOH account balances going into 2020, we take the year-end balance, $11,500 for the eligible. We subtract the dividend refund of $11,500. So going into next year, January 1st, 2020, the eligible RDTOH account balance is going to be $0. And we can do the same for the non-eligible. At the end of 2019, the balance was $72,662. We subtract the dividend refund for 2019, $17,250. So going into next year, January 1st, 2020, the non-eligible RDTOH account balance is going to be $55,412. So that brings us to the end of this video solution for Bowen Ltd. Good luck with your studies.